Hey guys, happy Monday. Today I'm live with Greg. If you've been following for a while, you've seen our Mortgage Monday videos. Today we're coming live to share some updates about the real estate world, the real estate mortgage, the mortgage world, and what's been going on. And I'm here with Greg. Hey Greg.
Thank you.
Thank you.
It's good
Thank
to
you for
see
being
you.
good to see you as always. So interest rate, that's like the talk of town right now.
Oh.
It's like everybody's talking about interest rate looking. What's going on?
Well, it's interesting. Let's go backwards a little bit, where all of the economic geniuses were saying that interest rates would be going up this year, and that we'd probably hit somewhere between 3.75 and 4.25 by the third quarter of 2022.
Mm-hmm.
Well, all the economic geniuses were about 1/3 correct, because the interest rates would go up there, but they said third quarter.
Right.
They're already there.
We'd be right.
Interest rates have skyrocketed from where they were at back in November and December.
Which is a little bit, it's scary. I'm concerned for my buyers this summer and to see where all this is going. And I know last week or so the Feds just announced that they will be going up in March, which I thought they already started. So
Well,
where is that going?
short-term interest rates, when the Fed says they're going to raise interest rates, that affects short-term money, such as car loans, credit card loans, unsecured loans, things of that nature. It has an indirect impact on long-term rates, but it feels very direct right now because our interest rates have already gone up so much. And a lot of that has to do with the Fed doing, not only saying about what they want, where they want interest rates, but also their purchase of bonds, which drives interest rates. Their Fed is purchasing less, and so as a result, interest rates are going up. Last week, the increase that really hit us last week had to do with the jobs or the employment report. The employment report came in extremely strong, almost twice of what they were expecting. And so that simply spurred everybody to say, now there's going to be more inflation, or the inflation is going to be there. So the Fed is saying, not only are we going to continue with our plan of increasing rates and buying fewer bonds, but now what they're going to do is they're going to speed that process up. That scared the investing market, so interest rates have gone up again. So depending on your credit scores, right now we're looking at anywhere, like I said, from 3 3/4 up to as high as 4.5, depending on credit scores.
Yeah, we worked some deals over the weekend and the rates were a little before already, and that's with excellent credit. I have a
Yes.
buyer's 800 plus credit score, and we're looking at 4% rate.
Yes, that's exactly what we're seeing right now.
Yeah, it's kind of ironic because I also, on the other side, I see so many buyers thinking we are going to have some kind of crash, that they should be waiting before buying, that now is not a good time, that what goes up must come down, and that's there's so much confusion out there right now.
Well, people have been saying it's going to come down, it's going to come down, it's going to come down in terms of home prices for a long time now. It's gone just the opposite.
Right.
Pricing continues to go up, which I think it will continue to go up for all kinds of reasons. Interest rates, I guess everybody knew that these 2% and low 3% rates probably couldn't stick around forever, and that's turned out to be true. They're not. Now, interest rates are still good. I mean, gee whiz, you're getting an interest rate at 4%, that's not terrible. It's not 2%, but it certainly isn't terrible. It's just buyers need to be aware that their payments are going to be higher at 3% or at 4% than they were when rates were at 3%.
Okay, that's what I was going to get at. Very quickly, what are some impacts of rates going up? Because some buyers or some people don't think it's much. Do you think it is something to be concerned with as a home buyer?
I don't know that it's something to be concerned with. It's something to be knowledgeable about. So, for example, if the interest rates go up 1%, just 1%, it affects the buyer's principal and interest payment on a 30-year fixed rate loan by just over 12%. So, put it in perspective, if you had a loan for and your principal and interest payment was going to be $1,000. Now it's going to be $1,120. If you had a $2,000, now it's going to be $2,240. So your payment is going to go up just because rates went up 1%.
And that's just 1%.
Yeah.
So be aware the prices can go up. And something too that could happen, correct me if I'm wrong, you could go, those that got, that had the pre-approval from a few months ago or last year, some of them now all of a sudden with higher rate may not be qualified to even buy, right?
You are right on target, because what happened is a lot of people were pre-approved, including by me, back in the fourth quarter, and we were giving them interest rates, we were quoting them rates of 3 to 3.375, maybe 3.5 at the high end. Now all of a sudden, we're looking at 4, 4.125, 4.25, and in doing so, the amount that they qualified for could be as much as 6 to 10% less than what they qualified for back in the fourth quarter.
And in such a tight market with tight inventory, that can mean a world of difference.
That's
I
right.
mean, it's two complete different homes, different neighborhoods, as if we can even find something for you. So it's definitely something to at least start a conversation with your mortgage professional, your real estate professional, to talk about what are your options before it gets too late and you price yourself out of the market possibly. Thank you so much for sharing all this
You're
with
welcome.
us. Before
Thank
I let
you.
you go, now what are your predictions? Obviously, we missed the mark at the beginning of the year. So now with everything going on, what would you predict? Where interest rates?
That's a great question. If I knew the exact answer, I'd be doing this video from some exotic island with an umbrella drink in my hand. But the bottom line is, I really think that where interest rates are at right now is probably where we're going to see them throughout most of the year. Again, all the economic geniuses said third and fourth quarter. It's just happened right away. I don't personally think that we'll go up to 5% or anything like that. Now, I might be wrong. I also don't think we're going to go back to 3.5. I think if we stay someplace between 3.75 and 4.5, that's about what you might expect in the marketplace. That's my prediction.
Okay, excellent. Well, we have it on video, so at the end of the year, we'll make sure we check with Greg to see where his predictions were. Do you one last word of advice for our audience?
Yes, I think the most important thing right now is people always ask, when's the best time to buy? The best time to buy is when you're ready to buy. Don't try to guess the market. It's like trying to guess if a stock is going to go up or down. Housing prices have been going up, interest rates have been going up. Find the house that you want, take action, and get into your home and enjoy it.
May the odds be with you.
That's right, may the odds be with you.
Well, thank you so much. This was very informative. Thank you. And thank you guys for watching. If you have any questions, make sure you comment below and we'll be more than happy to answer them. Thank you and see you next week.
Bye.
Bye. Excellent.